What is meant by leverage? So, leverage meant by effects that fixed costs have on the returns that shareholders earn. How operating leverage, financial leverage, and total leverage related to the income statement? In operating leverage, it has a concern with the relationship between the firm's sales revenue and its earnings before interest and taxes, or EBIT, or operating profits. In financial leverage, it has a concern with the relationship between the firm's EBIT and its common stock earnings per share, or EPS. And in total leverage, it has the combined effect of operating and financial leverage. Number two, what is the operating break-even point? Operating break-even point is the level of sales necessary to cover all operating costs. How does changes in fixed operating costs, the sale price per unit, and the variable operating cost per unit affect it? So, fixed costs are costs that the firm must pay in a given period regardless of the sales volume achieved during the period. The first step in finding the operating break-even point is to divide the cost of goods sold and operating expenses into fixed and variable operating costs. Variable costs vary directly with sales volume. It typically measures variable cost in dollars per unit sold. Number three, what is operating leverage? Operating leverage is concerned with the relationship between the firm's sales revenue and its earnings before interest and taxes, EBIT, or operating profits. What caused it? The cost is when it occurred when company has fixed costs that must be met regardless of sales volume. How is the degree of operating leverage, or DOL, measured? So, the degree of operating leverage measured through calculated by dividing the percentage change of company's earnings before interest and taxes, EBIT, by the percentage change of its sales over the same period. Number four, what is financial leverage? So, financial leverage is concerned with the relationship between the firm's EBIT and its common stock earnings per share, or EPS. What causes it? It can cause by a higher degree of fixed income securities such as debt and preferred equity. The more debt financing the company uses, the higher its financial leverage. How is the degree of financial leverage, or DFL, measured? So, the degree of financial leverage measured through calculated by dividing the percentage change in a company's EPS by its percentage change in EBIT. The ratio indicates how a company's EPS affected by percentage changes in its EBIT.